All three major averages trading in the green a little more than 90 minutes into the trading day. Investors are tracking a slew of big tech earnings as we've seen a recent pullback in some of those larger cap names. And we have seen a rotation for many into small caps, with the Russell 2000 continuing its upward trend today, up more than 10% in the last month. Joining me now in studio is Tom Hayes, Great Hill Capital Chairman and Managing Member. Tom, thank you for being here. We do know you're bullish on the small cap trade amid this market rotation. So what's fueling that positive sentiment for you?
Well, there's a lot of skepticism still in this rotation. Everyone thinks it's going to be a fake out again, but I'm going to tell you why. The dreaded words, this time it's different. There's actually a fundamental underpinning in why the unmagnificent 493 have legs for the second half, and why we believe the Magnificent 7 are actually going to start to underperform a little bit relative to the 493. And the number one underpinning is earnings composition. So we started out the year, the first quarter, Magnificent 7, 50% earnings growth, the unmagnificent 493, -1%. So they should have underperformed, right? Well, now that is shifting. And by Q4, you're going to have 19% earnings growth in the unmagnificent 493 and 17% earnings growth in the Magnificent 7. So decelerating earnings growth for the Magnificent 7, accelerating earnings growth for the unmagnificent 493.
So what areas of the small cap trade do you think are undervalued at this point? In other words, should you just be buying the index, or should you be a little more selective in your approach?
You can certainly buy the index like IWM. We have an auto parts maker called Cooper Standard, which we like. There's a huge amount of operating leverage. You're looking at real businesses. And what you're going to find in the small cap world is a lot of cyclical businesses. When you see the Fed cut, which is the second underpinning for this violent rotation, there are a few groups that outperform. Number one is small caps. They outperform by 11% over large caps within the 12 months after the first Fed cut. Cyclicals, so you have a lot of cyclicals within small caps. International stocks start to outperform because the dollar weakens on the Fed cuts. And REITs start to outperform. So those are the four areas. And then if you look at institutional positioning with the four most crowded trades, you have what? You have short China stocks, which is international. You have short small cap stocks. You have long Magnificent 7. So when everyone is crowded to one side of the boat, it makes sense to start to ease into the other opportunities in the market.
So quite a few trades that will benefit from that easing cycle. Are you in the camp that we're going to start seeing cuts in September? You think possibly July?
The market's telling us 95 to 98% chance of the first cut in September, which would imply a second cut in December. If they do it that early, Alexandra, I think they may be able to get away with just 2 or 3 cuts. If they wait too long due to political considerations or other, I think you're seeing a deterioration enough in employment and in inflation. If they wait too long, it's going to cost them too many cuts. So I think they kind of know this from history. The market is assuming that they know this from history. And if they go in September, I think we're in good stead, for sure.
Okay, that'll be something a lot of investors will be keeping an eye on. But you also are bullish on 2 names in particular, Disney and GXO Logistics. 2 very different companies, but I want to start with Disney. This is a company that I cover closely.
Yes.
Where do you see the pricing going for this, and why are you bullish?
Yeah, so this is really out of favor right now. We break it up as some of the parts evaluation. So basically you have the parks and the consumer products and experiences. That business alone will do $10 billion of EBIT, okay, which implies $80 a share. The stock's trading around $90, $95 right now. So you're effectively getting 0 value for Disney+, 0 value for ESPN, 0 value for the theatrical releases. So if you look at their streaming business relative to Netflix per se, Netflix got 277 million subscribers. Disney Plus has 153 million subscribers. In the case of Netflix, you're being ascribed $277 billion. In the case of Disney, you're being ascribed $0. So we think that business is going to do $15 billion of EBIT over time, which implies that the stock can double over the next 3 to 5 years. And why do we feel confident is because ValueAct, the activist investor, is now involved, and they turned around Spotify, which you saw the earnings this morning. They're really good with subscription businesses. They turned around Salesforce, and they turned around the New York Times. And if you can turn around the New York Times, you can certainly turn around Disney. So we're excited about that opportunity.
Okay, bullish on Disney, and then GXO, a more cyclical name, but you think the timing is right?
Timing's great. So you had a huge amount of pull forward, all products during COVID. Everyone was buying everything from home. Then it was the revenge travel and services became the forefront. Now we're moving into a more balanced environment. They do outsourced supply chain, logistics, reverse logistics, and this is a Brad Jacobs company, and everything he touches tends to turn to gold. Whether it was United Rentals, if you invested $1 million with him then, you made $47 million over a number of years. If you invested in XPO Logistics, if you invested $1 million, you made $31 million. So we think they're expected to nearly double EBITDA by 2027, which would imply the stock can go up materially from here. But I think when they get to that level of EBITDA, because the growth rate is higher, they're going to get multiple expansion on top of it. So I think there's a lot of upside. They really operate kind of in a duopoly, in a fragmented business with DHL. And they're better, they're stronger, and we're going to get rewarded for that.
All right, two names to keep in mind moving forward.
Thanks,
Tom Hayes, Great Hill Capital Chairman and Managing Member. Thank you so much for joining us.
Thanks, Alexandra. I appreciate it.
Coming up.